Thank you so much, Jenna. During economic downturn, some companies look to consolidate. Witness the recent foldings of New Line Cinemas into Warner Brothers Studios. But for the world's biggest confectioner, Cadbury Schweppes, separating or demerging is a better option. Well, the British chocolatier is spinning off its U.S. soft drinks business in May, turning Dr. Pepper and Snapple into a publicly traded company on the New York Stock Exchange. So in today's Brand X, Fox Business London-based correspondent Dominic DiNatale is here to tell us some of the details. Good morning, Dominic.
Morning to you. Now, in the demerger of Cadbury Schweppes, some of our favourite brands are going to have to take sides, and we're talking different sides of the Atlantic Ocean. So what I did, went out on the streets of New York to find out if American consumers knew which brand belonged to which country.
America's got a sweet tooth that's worth dancing about for some, but who knew that a few of America's biggest brands were originally homegrown, but today they're not home-owned?
It's just like the Pepsi Challenge, except, well, we're talking about nationalities. We'll see if anybody thinks any of these brands are British or whether they're American. Some people over here, let's go talk to them. Hey there, how you doing?
Very good.
All right, which of these brands do you reckon might be British?
I think the Snapple would be British and the Dr. Pepper's American.
And why do you reckon that?
Just if one's got to be British, I know Dr. Pepper's been around the United States for a long time.
Both brands are British owned.
Well, I'll be dog.
Cadbury Schweppes is the British company pouring the brands back into the market they came from. Dr. Pepper is especially going to get a good homecoming.
Dr. Pepper is our very favorite in Memphis. We're from Memphis, and that's what just about everybody drinks, Dr. Pepper.
Amid the lunchtime rush, David Letterman's deli man Rupert G reckons that once back in American hands, soda sales could have some extra fizz.
Well, I guess it depends on who's marketing it. I mean, I think if you're proficient in marketing the product, it will do very well.
The good news for you, though, if it goes through the roof?
Oh, yeah, it certainly would be, yeah.
So where does that leave our candy lovers, soon to be Cadbury's core business? Not hard to come across customers for that.
I'd say chocolate heaven.
Looks like the British won't be pulling out of the US just yet, at least not while they can still make people go all gooey over the sweet stuff.
Well, Cadbury's demerger is not an inexpensive proposition. Cadbury is taking on more than $3 billion in debt to go through with the separation. Now, the Dr. Pepper Snapple Group have a net debt of nearly $4 billion. Talk about an expensive divorce. Here with some insight on the split up is M&A advisor and CEO Roger Aguinaldo. And rejoining us is Fox Business's Dominic DiNatale. Good morning, gentlemen.
Morning. Morning.
Dominic, let me start with you. Why is this happening?
A key investor called Nelson Peltz, who's a big player here in the beverages and food industry in the United States, was very unhappy with Cadbury's management approach to the United States market. He didn't think they were trying hard enough. So he's a very powerful investor, so he forced them to come up with a sale plan. That's what happened. You know, Roger, I was saying to you during the commercial break, I've worked on Wall Street most of my entire life, and I said, explain this one to me, simplify it. Why a demerger instead of selling the company off?
Right. Well, it comes back to Nelson Peltz. He actually wanted them to sell off pieces or sell off the piece of the company to investors, to a private equity investor. But what happened in the credit markets, the private equity could not raise the money for a sell-off of all the company. So what Cadbury Schweppes had to do was to figure out how to refinance this transaction, and they're going to do that by listing the beverages unit on the New York Stock Exchange and then putting that up, financing that with debt.
Okay, so Roger, let me just ask you this, because we just talked about the fact that as a combined company, they had $4 billion in debt, but to restructure this thing, it's going to cost $3.7 billion. So, you know, if you're sitting at home right now, or you're like me, you're going, how does this make financial sense?
Right. Well, this makes financial sense because, again, it comes back to the financing of the transactions. I don't have all my numbers straight, but if we were, or Cadbury Schweppes were to sell off the company to a private equity company, they would have been able to borrow maybe 4.5 times EBITDA, the earnings of that entity. They're not able to do that.
So this is their only option, and they maintain a stake in the company.
Right. And now the financing they're able to get is about 3.1 times EBITDA that the banks are willing to lend to finance this transaction.
Okay, so Dominic, let's talk about the long-term effects of this, because one of the things that we noticed, when doing the research about this, is there are a lot of banks involved in this restructuring of the debt. We understand there's a shareholder meeting coming up on April 11th, and there's going to be an IPO. What can we expect? Take me out 5 years. What's the long-term implications for these two now separated companies with stakes in each other?
I can talk about the Cadbury's perspective because that's in my home country. They have had such big challenges with this drive for healthy eating in the United Kingdom and everywhere around the world. So 5 years from now, it needs to actually come up with some more. It's got to get better products, perhaps explore different parts of the food market that it can actually go into. Sales in chocolate have been coming down, so it's got to counter that with something else, basically.
And Roger, take us through the process right now, because what they have to do is they're now restructuring debt. They're in a good situation in terms of the banks. But what does this now mean for the IPO and in terms of going public? How do you know what the value is of that until you get out and you do the roadshow and you try to sell the concept? I mean, look, they're brands that we use every day. I mean, I eat, I eat fishies and Sour Patches all the time, and who doesn't love Dr. Pepper? But, how do you get people excited and enthused about the brand?
Well, Dominic's piece at the beginning of this segment was very interesting. Everybody pretty much knew the names of these brands, which is a great thing when you're trying to do an IPO.
They don't necessarily know who owns them.
They don't necessarily know who owns them or where it's coming from, where it originated, but they know these brands. They'll buy these brands, and that fares well for an IPO in which people are going to say, okay, I'll invest in this company. Do I know this company? Do I know this company's products? And that's, especially in a time when IPO market has it's not doing as well, this is a great IPO for those looking to invest in brands.
Okay, and one last question for you, Roger. At what point do you determine if you're a corporation and you're demerging? Because, we hear about all this stuff now with Barry Diller and what's going on, and if in fact they might spin off businesses or do some demergers. Right. At what point, as the parent company, do you decide what percentage stake you want to maintain in the company that's been spun off?
Well, it comes down to valuation. You have to talk with your investment bankers on Wall Street to determine how much of the shares they can sell and at what value and how much money you need. The banks in the agreements that they're lending to Cadbury Schweppes have a number in mind. They haven't told us exactly what that number is, but there's a number, there's a bogey. They'll feel confident that they'll be able to make that number. And when that comes out, we'll more than likely figure out whether that can be handled through the IPO.
All right, great discussion. And the fact that all of this is here, you cannot take this because I'm going to start eating it now. Okay. And I noticed you brought me the Cadbury with caramel. Dominic, a man of my own heart right there. This is my favorite chocolate in the whole world. Here she goes. Oh, my skirt's definitely going to split today. All right, Dominic and Roger, it was great having you guys. Thank you so much. All right, coming up next, of course, it's the one thing you should know. And the one thing you should know is that I love chocolate. But anyhow, we'll be right back. Seriously?